Um, I'm currently maybe in Aussie, but I'm currently trading GDP USD, sha.
Okay, what's your bias on GBP USD? Are you buying or selling?
Selling.
Okay, that's a good one. That's a good one. I took a sell too
Hmm.
earlier this morning, and I think I've closed some of the trades. I took like 20, 30 pips from the bearish move. Okay, so I'm still expecting it to drop to this to a discount zone. That's my expectation.
Hmm.
I expect it to drop to this below 50 or below 61.8. That is where I would consider buying GBP USD. We have a fair value
Mhm.
gap here, which I've identified. Okay, so that's my bias. And I think yesterday this was the low of yesterday market, and this was the high of yesterday market. Okay, so at the moment price is at a premium zone, at premium. So if we are considering buying, we should wait for price to pull back to a discount zone before we buy. So I just capped GBP USD itself. I know there's a high probability for it to get to this zone. Okay. If it does not get to this zone, I would not buy GBP USD today. I would not buy. It should get to at least, it should go below the level 50. If it doesn't get there, I will not buy. Even if it breaks out from this resistance, I will not buy. I want to see it pull back to a discount level before I buy. So it is still bearish at the moment. It is still bearish. I would only consider buying above this zone. Now, what's your take on Euro Aussie? I think Euro Aussie should be bearish, right? It should be bearish. I bought Euro Aussie this morning and I took like 25 on Euro Aussie. But I know long term Euro Aussie should be. Please, if there is noise at your end, mute your mic. Mute your mic if there is noise at your end. Let's see Euro Aussie. Uh, Euro Aussie. Okay. Please, if there's any pair you want us to analyze together, just drop it in the comment, please. Or you have any question, just drop it as comment. Okay. So let's start with the daily. Why am I considering selling Euro Aussie? Let's start with the daily. Let's start with the daily. Uh, few minutes. The chart is loading. Few minutes. So I'm considering selling Euro Aussie, but I bought Euro Aussie this morning. The reason I bought it, as you can see on that 1 hour time frame, we had a spinning bottom. That was the reason I bought Euro Aussie, and I made close to 25 pips on Euro Aussie. So you can see why I am considering selling um, Euro Australian dollar. Can you see it? Yesterday candle closed as a a doji, or you call this a spinning top, right? Which indicates change in trend. Not just that it closed at a doji or a spinning top. You can see that that level was also a previous resistance level. You can see one would have even entered sell after because of yesterday market, and today one would have made some good profits, right? From this point, from this point to this point. That's about wow, that's about 100 pips. You can see it has done over 100 pips. But since one didn't join this move, one should wait for a pullback. A lot of people will jump in and start selling at the current market price, and before you know it, price will pull back and hit their stop loss. We have missed this move, so for us to sell, we need to wait for price to pull back to a premium level before we buy. Or sorry, before we sell. We have to wait for price to pull back to a premium level before. we buy. So here's our premium level on. So if we are to work with the yesterday candle, this will be our high. This will be our high and this will be our low. So let's apply Fibonacci. Okay, so this is the high of yesterday market and this is the low. So let's go down to lower time frame. Let's go to 4 hour. Please bear with me. I don't know why the system is slow this morning. Taking time to load that. Probably because I didn't off the system last night. It went off itself. I was supposed to restart it this morning. So you can see okay, this is the high of yesterday, this is the low. So let's apply Fibonacci to, or let's go to 1 hour. Let's go to 1 hour. So I'm still bearish on Euro Aussie. Okay, so it's taking time. Okay, so let's go to 1 hour. So yesterday candle was the first candle. Please bear with me. The system is slow. It's slow. It's still slow. I think this should be the first candle. Okay, this was the first candle for yesterday. Am I correct? Okay. This was the first candle. Okay, so this was the first candle for yesterday market. So this is our high for yesterday market, and this is our low for yesterday market. So let's apply Fibonacci. Okay, so we should price to pull back to uh 50. Anything above 50 is premium. So we should see price pull back to level 50 or level 61.8. That is where I will consider selling Euro Australian dollar. If price does not get to this level, I would not sell. Even if price breaks out from this support, I would not sell. Price has to pull back to this level, a premium zone, before I will consider selling. So that might take on Euro Aussie. I'm still very bearish on Euro Aussie. If price pulls back into this zone and I take a sell, my stop loss will be probably the high of this candle or the high of this candle. I want to ensure that my risk on the trade is very low. If I decide to sell, that's why that my bias is bearish, and if I decide to sell from the current market price, my risk on the trade will be very high, because if I'm selling from this point, my stop loss will be at this level. This will be the best level to use as my stop loss. This is 73 pips. So if I'm risking 73 pips on a trade, my TP would be around 125 to 130 pips minimum. The question is, can the market give me 130 pips today? That's the question. So I don't want to take such risk, because the reward, it's not certain that the market will do 130 pips today. Okay. But if price pulls back into this zone and I decide to sell, my risk could be less than my risk from this, let's say around this level. I believe you can hear me. You can see if price pulls back into that zone and I decide to sell, my risk is 21 pips, and I can risk 21 pips for 100 pips. You can see that's like 1:5. Okay, so I'm waiting for price to pull back into this zone before I I I sell. I took this buy this morning. I bought after the close of this spinning bottom. This is a bearish spinning bottom. So this is 1 hour. So what I did was to go down to uh, 15 minutes, 5 minutes, and 1 minute time frame to see or to confirm the setup, the pattern on those time frame. So I took a buy. I took like 25, 30 pips on this move. on this bullish move. So after the close of that spinning bottom on 1 hour, let's see what we had on 15 minutes and 5 minutes time frame. Okay, so let's go to 15 minutes. So one could have also waited for that next candle to close on 1 hour, right? After the formation of a spinning bottom, you wait for the next candle to close bullish, right? Before you execute a buy trade. So you could have also waited for that next bullish candlestick on 1 hour. So you can see what we had on what was it called? On 15 minutes time frame. Okay, we had several candlestick formation indicating that the sellers, the bears, are becoming weaker and buyers are showing up in the market. Immediately this candlestick closed above the highs of all these candles, these previous candles. You can see it closed above the highs of all these one, two, three, four, five. This tells me that we have buyers in the market who are willing to push price up. This tells me that demand has started increasing. And when demand starts increasing, what happens to price? Price will go up. So I'm out of this trade. I took like 25, 30 pips on this trade. Okay. So I wouldn't advise that you jump in and buy now. Wait for price to go to a premium level, then you consider selling. That's my take on Euro Aussie. Buying at the current market price is at a high risk. Is at a high risk. If there's any pair you want us to look at together, please drop it in the comment space. Okay, Euro GBP. Euro GBP. I respect you guys that trade that pair. For me, I think that pair ranges a lot. I think that pair ranges a lot. So I don't like trading it. It ranges a lot. I respect you guys that trade Euro GBP. But let's see the charts. That I don't trade doesn't mean I can't analyze it. I can tell you what's happening on the charts. Let's see it. If you're new to trading, I always advise that you stick to focus on the what's it called? On the major currency pairs. Pick one or two pairs and just trade those pairs. You don't have to trade all the instruments. Focus on one. Be a master of one or two pairs. Okay? The truth is that if there is no move on GBP USD and Euro USD, Euro GBP 7 will not move. Euro GBP will not move. If those major currency pairs are not volatile, those cross currency, they will not be volatile. I believe it's the major currencies, the move on major currency pairs that determines what to pay out on exotic and cross currency pairs. Please bear with me. This system is slow. I really wish I can just restart the system. Just be patient. Euro GBP. Yeah. I, okay. Should be under cross. Euro GBP. Okay. GBP USD. Okay. And gold. Before you joined, we've already analyzed the GBP USD. We're looking for buy opportunity, buy setup. That's what we're waiting for. We want to see price push down to a discount zone before we buy. Okay. Okay. So this is Euro GBP. Let's start with the daily. Let's see how yesterday candle closed. Okay. So this is the daily. So let me see the weekly. Okay. Based on what we have here, last week candle closed as what? A bearish uh, candle, right? Which looks like an angry man. And also we had a previous support here. So this could just be a breakout and retest, right? This candlestick broke out from this resistance and there was a retest. So should we just jump in because we have what looks like an hanging man? No, because this was also a breakout and a retest. Okay, so for me, it's not clear. The trend on Euro GBP is not clear. But if I want to take any risk, let me go back to daily. If I want to take any risk on, it's not clear. It's not clear. It has been in a range. It has been in a range. But if I want to take any risk on Euro GBP, this is how I would have traded Euro GBP today. Now, this was yesterday candle. What I would have done was to identify the high of yesterday candle. Okay. What I would have
Good
done
morning,
was to
sir.
identify. Good
Well done,
morning,
sir.
please. Yeah, thank you. You're welcome. So what I would have done yesterday was to identify the high and low of yesterday candle. Okay. Please mute your mic, please. Okay. So after
No,
identifying
well,
the high and low, this was the high and this was the low of yesterday market.
okay.
Please mute your mic.
Well, now, you-
Mute your mic.
open now, where? Make
Okay. So 2 minutes I have to mute that person. Okay. So this was the high. This was the high and this was the low. So I want to know. Let's pick our Fibonacci 2. This is the high, swing high, and the swing low for yesterday markets. Swing high and swing low. So this is how I would have traded Euro GBP since it's in a range. Okay. So we had a premium here, we had discount here. So this morning price was trading around after the close of this. This is 1 hour. After the close of this bullish candle, I would have executed buy. Okay, I would have executed buy because price was at what? A discount level. It was at what? A discount level. I would have executed buy. My stop loss would have been the low of this bullish candle. The low of this bullish candle. What time? Let me see the time this candlestick formed. Okay, this was 12 a.m. 12 a.m. Okay, but I don't trade Asian session. This would have after the close of this armor. After the close of this armor, one would have entered buy because it was at discount, right? One would have entered buy. Set your stop loss. The low of this candle will be your stop loss. The low of this candle will be your stop loss. Okay, then your profit target will be around this premium zone. That's where price is heading to now. Now, if price gets to this premium zone, there's that probability that price will pull back again to a discount zone. That's how I would have traded what's it called? Euro GBP. See that I would have bought after the formation of this armor, but at this time I think by that time I would be on bed, so I would have missed this move. So the second opportunity will be this. Okay, buy from this level, set my stop loss maybe 5 pips below this level. By now, I will be in profit, hoping that price will get to this level. And now, when I would have adjusted my stop loss to break even. Okay, so that's how I would have traded on Euro GBP. The trend on Euro GBP is not clear. It is not clear. Euro GBP is in a range. Okay, maybe let me look at the monthly. Maybe I'll be able to. Maybe the monthly. Let me see the monthly chart. But on weekly is not clear. On daily, it's also not clear. Euro GBP is in a range. Okay, this is monthly. So I think monthly looks bearish. I think the monthly looks bearish. It looks bearish. Okay, it looks bearish. Why? We have a fair value gap here on the monthly time frame. So it could be that this gap They just want to fill up this gap before pushing price down. Okay. With that, they just want to fill up this gap before pushing price down. So on the monthly, what I see here is a bearish setup. What I see here is a bearish setup on the monthly time frame. It's a bearish setup. Okay, so that's my take on Euro GBP. So like I said, on the 1 hour, if price gets to a premium level, premium zone, you might want to consider selling uh Euro GBP. Okay, let's look at gold. And bias for gold today is bullish, but I think it's still bearish at the moment. Okay, that's short term. Short term, it's bearish. Wow, I think it has dropped to my entry level. I think it has dropped to my entry level. Okay, so I was expecting it to drop into this zone before I buy. Here's my phone. Okay, so I was expecting it to drop to this level and it has entered that level. So hold on, let me switch to my phone. Let me confirm. Okay, because I also identified this level on my phone. Let me see gold. Okay, it has entered into that zone. So I want to take a buy on gold now. Let me see the risk. If I'm buying gold from this price, my stop loss, let me see. This is 49.50 pips. This would have been the best place to use as stop loss, or I should still wait for price to still drop into. This is a good entry. This is a good entry. So I'm gonna take a buy on gold. Okay, I'll take a buy on gold because that's entered into my entry zone. Okay, so that's my take on gold. It's a buy for me today. It's a buy for me today. Though we have a major news that will be released by 1:30. I think employment change also be released by 1:30. That could also influence price action. It's a major news, so it could influence price action, and that's why we use stop loss. Okay, as technical traders, if the fundamental is against our prediction, we should be out of the trade. Okay, we should be out of the trade. So if I'm taking a buy from this current market price, my stop loss will be at this level. Because there's still possibility for price to pull back into this zone. Okay, so to be on the safe side, my stop loss will be at this level. If the market goes in my direction, probably if it closes above this high, if it can break this high, I can now adjust my stop loss to few pips below this level. First, it has to break this high to confirm that we have more buyers in the market. 2 minutes, let me just execute this trade on my phone. Okay, so that's my take on gold. I am bullish on gold, and I'm taking this trade now. Okay, so my stop loss will be at this level. Okay, so that's it for gold and euro GBP. Is there any other thing you want us to look at? If you have any question, just unmute your mic. Unmute your mic if you have any question. What is the low here? This is 1817.42. 1817.42. If you have any question, please unmute your mic. Or if there's anything you want us to analyze together, let me know.
Hello, sir. Can you hear me?
I can hear you.
Okay, good morning, sir. Thank you for the value.
You're welcome.
I want to ask, is it possible for two different persons or more to be looking at one pair and then be seeing different things? Maybe one is seeing a sell, the other one is seeing a buy, and they are all correct.
Definitely. Yeah.
They are all, they are all correct.
Yes. It all depends on the, yes. It all depends on the time frame the person is trading or the person is looking at. That person might be a scalper. If you're a scalper, you are trading 1 minute, 5 minutes time frame. That person might be seeing buy. You might be seeing sell as a day trader. So it depends on the time frame. So if someone says, if you're seeing a buy setup on a pair and someone is seeing a sell on his own side, you should ask the person what time frame he is looking at. Okay, so as a scalper can see buy and sell, you know, in a day. If you are trading 5 minutes, look at 5 minutes. This is 5 minutes. Today is 5th, right? You can see it has bought. It has bought. It has sold. So a scalper will tell you at this point that he's buying. He would buy, take profit. He also see opportunity to sell. He would sell, take profit. But as a day trader, since your bias is what? Buy. You wait for price to enter into your point of interest before you buy. That's just it. Someone who is trading monthly can be seeing bearish long term. So it depends on the time frame. So you can be looking at the same chart, the same pair, but have different buyers. I hope that is clear.
Yes, sir. Thank you, sir. So again, I want to know, most of you people that have been in the industry for a long time advise maybe between 2 or 3 pairs.
Yes.
Now, I notice that sometimes if you are using a particular strategy to trade and you restrict yourself to say 2 or 3 pairs, I just feel you're kind of limiting yourself because sometimes I'll check the market and I'll not find opportunity. I'll check and I'll not find opportunity to trade. So, for instance, if you notice that USD pair has been very slow, between last week or until now or thereabout. So in that case, and if you are restricting yourself to say, for instance, major pairs, how do you go about it? I'm just thinking it's good you have maybe up to 10 pairs so that you can just
No,
check around whichever pair you find opportunity and then take it up.
10 pairs will stress you. You'll be putting too much pressure on yourself trading 10 pairs. That's the way I see it. Unless you are very experienced, though. You are very experienced. But if you are new, like I said, if you are new, focus on 1 or 2 pairs. But if you are experienced, if you are a profitable trader, not just experienced, you've been trading for years, you are not profitable. You are still not, I don't qualify you as an experienced trader. You are a profitable trader. You can trade more pairs. But if you are new to trading and you are still struggling, focus on 1 or 2 pairs. Master your strategy. When you have mastered your strategy, that same strategy will work on any other instrument that then you can now spread. Do you get what I'm saying? Focus on 1 or 2 pairs. You don't have to trade every day. That is the problem we traders have. We want to trade every day. And that's why we keep losing. You make profit today, you give it back to the market tomorrow. You make profit today, you give it back to the market. Trading requires a lot of patience. It requires a lot of patience. So if you are focused on 2 pairs, if you don't see setup on those pairs, just ignore that day. There is no trade. Go do something else with your time. You only trade when you see setup on those pairs. I hope that answered your question.
Yes, sir. Thank you, sir. Lastly,
Okay.
sir, there's this pair you analyzed that when I joined, I don't know the name, but it was already 100 pips when you measure it.
Okay.
Now, that pair, there was a spinning top that formed, and you were saying if one has entered earlier, it would have made that 100 or more
Yes.
pips. But
Yes.
for me, I'm thinking, after that, that doji need to be formed, and then our entry should be after even the next candle. And by that analysis, by my own opinion, that means you don't have anything to enter that time that doji was formed to make that 100 piece. I don't know whether it's correct.
I don't get you. I wish you can take me to the chart or the pair so that we'll look at it together. That would be easy for
There,
me
there
to.
was a pair that moved 100, that you measure 100
If
piece.
a trade, for
Pips.
example, we should have entered buy at this point. This is where we would have entered buy on this trade, on this gold. We should have bought from here, right? Now, if you log in, you open your chart and you see that price is already here, you shouldn't enter, right? You shouldn't enter. If you want to enter, you should wait for a pullback. Do you get it? So you know where you are supposed to have entered the trade. For example, at this point, we had, this is a doji indicating change in trend. The next candle has closed bearish. We should have entered sell from this point. Now the market is trading at this point. Why should we enter sell here? It do not make sense now for us to enter sell here, because if we had entered sell from this point, our stop loss will be at this level, which is less than 10 pips. But if we decide to sell here, our stop loss, we're supposed to still set our stop loss. If we sell from this point, our stop loss is supposed to be at this level. So we'll be risking 82 pips if we decide to sell now. Yes, you can set your stop loss here. You can set it at this level. But the thing is, they can easily hunt for those stop losses at this level and at this level. To be on the safe side, this will be the best place to set your stop loss. But if you decide, okay, I don't risk more than 20 pips, you just set your stop loss at 20 pips or let's say 30 pips. They can easily hunt for that level. You get what I'm saying? They will easily hunt for that level. So since the market has gone in your direction 80 pips and you missed that move, at least you should wait for price to pull back. At least it should pull back 40 pips. 40 pips, or you apply your Fibonacci tool and wait for price to go back into a premium level before you sell. But selling at this current market price is at a very high risk. So you should know when you ought to have entered a trade. If you miss that move, if the trader has gone in your direction, let's say 50 pips or 30 pips, wait for price to pull back before you enter the trade. Patience. Okay. I hope that answered your question.
Hello, sir.
Yeah, I can hear you.
Yes, okay. This is what I'm saying. A doji, a green doji was formed on an uptrend.
Okay, doji formed in an uptrend. Okay.
Uptrend, yes. Now, for us to sell,
What do you
that
call
doji
it?
is supposed
What
to
do you
be,
call it? You said a green doji or what?
yes, a green doji was
Doji is
formed
not
in
supposed
an
to have a
uptrend.
body. Doji is not
Yes,
supposed to
now,
have a body. Doji
yes,
is
not
not
supposed to have
supposed
a
to
body.
have a body.
That's true. That's the pair you analyze. I'm trying to paint the picture now for you. That
Okay.
doji you analyzed this morning was an uptrend, but that doji is supposed to be red for us to sell,
This
but it
one,
was green.
are you referring to this one I just pointed at?
No, not that pair. The one you analyzed earlier that made 100 pips movement. That you said if one had entered earlier.
Which pair is that? Was it Euro Aussie? Okay, I think it was Euro Aussie.
I just joined. I didn't remember the pair, so I just saw you analyzing it.
I think it
But
was Euro Aussie.
that doji was from up. Now it was supposed to close. It was supposed to be a red doji for us to sell, not a green doji.
Okay.
But then it was not a red doji. It was a green doji. Yet it sold 100 pips as you analyze it. It was sold 100 pips.
If it's a green doji, if the body is doji is not supposed to have a body. If it is green, you are supposed to wait for the next candle to close bearish before you sell.
That's what I'm saying. You're supposed to wait, but without waiting, it now moved 100 pips from what you analyze. 100 plus pips was the movement downwards
It's not
when
possible
we check
now.
it.
It's not possible. If it moved 100 pips, then that means the next candlestick close bearish now. For it to drop 100 pips, it means the next candlestick close bearish. It's not possible for it to drop if a candlestick next to it didn't close bearish now. It's not possible. You get what I'm saying? It's not possible. Unless
Okay,
price
sir.
went up. Unless price went up. But if it dropped, that means the next candlestick closed bearish now, right? Just as we have it here. Let's say this is the doji and price now dropped. It means that the next candle should be bearish now. It's not bullish, it's bearish. You get what I'm saying?
Yes, sir.
You get what I'm saying? Okay.
Yes, sir.
All right. Any other question? Any other question? Any other question? Or is there any pair you're looking at trading you want us to analyze together? If there are no questions, I would have to end the session. Any question? Any question? No question. Okay, if there are no questions. I'm still here. I'm still here. I'm still here. I'll still be here till maybe 10. Okay, so if you have any question, maybe 9:45 or 9:50, I'll still be here. So if you have any question, you
Mr.
can.
Master.
Yeah.
Hello?
Speakers, I can hear
Please,
you.
what's the take on GU? That GU.
GU is bullish.
Okay.
Hold on, let's look at GU. It's bullish. I sold this morning around 7 a.m. I took a sell, made some profit on that. But long term for the day is bullish. Okay, you can see it's still bearish. So I took a sell after the formation of this what's it called? this you can see this is spanning top. This is a spanning top, and this is what a bearish candlestick close after it. So that was the reason I sold uh GU this morning. And the fact that I was expecting price to drop to a discount, you can see I've identified my discount zone. So the fact that I was also expecting price to get to this level, that was the reason I took a sell. Okay, after the formation of this doji spinning top and this next candlestick, that was the reason I took a sell. Though I didn't hold myself to this level because this is where I was supposed to set my take profit. Right, this is where I was supposed to set my take profit. Since I was expecting price to get this level, my TP should be around this level. But I took out, I think, 20, 30 pips because my risk on this trade was around 9 pips, 9, 10 pips. That was the risk I took on this trade. And I made close to 30 pips on, even 40 pips. I think I still have one that is running, that is still active. I think that one would have HTP too. 211. Okay, I still have one. That one is 40 pips. That one is 40 pips. I entered at 1.2157 and my TP is at 1.2117. That's 40 pips. It's like four pips to hit my TP. So it's still bullish. It's still bullish. You can't sell now. You can't sell now. You can't sell now. Though it's possible that price will get to this level, but you want to look at the risk. If you sell now, your stop loss will be at this level. Your stop loss will be at this level. So that risk will be close to like 30 to 40 pips. So let's see the risk here. You can see almost 40 pips. And there's possibility for price to get to this level. You can see. Can you see the risk reward? So if you execute a sell trade now, it's like you'll be risking the risk reward is 1 to 1. It doesn't make sense now. You are risking $1 to make $1. It doesn't make sense. But if you had entered earlier, you risk 10 pips and you made, let's say, 40 to 50 pips. That's a good risk reward. That's a good risk reward. Do you know that if you're trading with risk reward of 1 to 3, 1:3, if you win just 3 trades out of 10 trades, you will still be a profitable trader. Do you know that? If your risk reward on every trade is 1 to 3, out of 10 trades, if you win just 3, you will still be in profit. Because let's say you're risking $1 to make $3. Out of 10 trades, you lose 7 trades, right? 7 trades, that will be $7 loss. And you won just 3 trades, and you are making $3 on every trade. 3 times 3, that's $9. You'll still be in profit. That's $2 profit. Do you get it? So your focus should be on risk reward. Risk reward 1 to 3, 1 to 3. That's what I'm actually working with now. 1 to 3. Most of my daily trades, I don't want to be risking more than maximum 20 pips. 20 pips. And I know most of these pair can deliver 50 to 60 pips in a day. I don't want to be risking more than 20 pips. My target will be between 50 and 60 pips. I know most of these currency pairs will deliver 60 pips. But when you are risking 40 pips, 50 pips, and you want to, your reward is 75, 80 pips, most times the market will not deliver 75, 80 pips in a day. It is only when there is a major news, that most of these currency pairs will do 80, 100, 150 pips. And those days are very rare. They are very rare. So that's why I just had to, fine tune my system, reduce the risk on the trades I take for good reward. Yes, you can use Fibonacci on any pair. You can use it on any pair.
Hello, sir.
You just use your Fibonacci to identify premium discount equilibrium. Premium discount equilibrium. At the close of the market for the day, you can just let hold on a few minutes. I will attend to your question. Let's go to GBP USD.
Sir, please, what's this last page? Just analyze now.
Few minutes. It's GBP USD now. GBP USD.
GBP USD. Okay.
Yes, GBP USD. Let's see what played out yesterday on GBP USD. Just so that I want to point out something. Okay, so this was yesterday. This was yesterday candle. So you can see price is still currently trading at a what's it called? A discount. No, sorry, premium. Premium heading to a discount level. Heading to a discount level. If you look at what played out, this was on Monday. This was on Tuesday, right? Yeah, this was Tuesday. Let's apply Fibonacci on. So after the formation of this spinning top, our buyers would have been buy, right? Yes, for yesterday, our buyers would have been buy because we had a spinning button. So we would have been looking for opportunity to buy yesterday. But what happened before price went up? What they did was to clear the stop losses at the low of this spinning button. They know a lot of traders would have executed buy. Retail traders would have executed buy and their stop loss would be at that low. So the first thing they did was to clear the stop losses at that low. Let's go to 4 hour after the close of that spinning top, spinning bottom on daily. What do we have on 4 hour? You can see on 4 hour, we already had several candlestick formation indicating that the bears are becoming weaker and buyers are showing up in the market. So yesterday we would have bought GU, okay? We would have bought GU, but before they pushed the price up, what they did was to cost on for the stop losses. You can see that was the first thing they did because a lot of people would have, the impatient traders would have entered buy after the formation of this doji. Okay, so you can see this is the high and this is the low. So when the market closed yesterday, I think this was the last candle. Okay, this was the last candle. I think it was at equilibrium. Okay, you can see it closed at equilibrium. So what you would have done was to wait for price. Since our buyers is buy, what you would have done was to wait for price to push down to a discount level, which is around this level. That is when you would have considered buying. And if you had bought when price dropped to, let's say, this level, when price got to this level, this candlestick, you can see this candlestick confirm that, okay, this is like a doji, indicating that, okay, it's likely we're going to buy. If really price dropped to this level, you would have bought and probably set your stop loss maybe few pips below this level. So what they did was to first of all clear the stop losses at these lows before pushing the price up. What are they trying to do here now? They know that probably a lot of people would have bought from this level. So they will definitely want to hunt for the stop losses at this level before pushing price up. You can see that a lot of people would have entered buy also after the formation of this candle. Stop losses would be around this level, this low of these candles. A lot of stop losses are there. So the first thing they will do is to clear all the stop losses at this level before pushing price up. I hope that is clear, Jeremiah. So you can apply Fibonacci.
Yes, sir. Yes, sir.
Yeah. So if you're a day trader, after the close of the daily candle, which is by 10 p.m., identify the high for that day and the low for that day. Okay. Now,
Yes, sir.
you need to, okay, if price is at equilibrium, or let's say your bias for the next day is buy based on the candlestick formation, the close of the candlestick formation, you want to wait for price to push down to a discount level before you buy.
Okay.
And if your bias is sell for that day, you want to wait for price to push up to a premium level before you sell. I hope that is clear.
Yes, sir. Yes, sir. That's true,
Okay.
sir.
Okay. Someone wanted to ask a question. I want to say something. Any question?
Yes, sir. I wanted us to look at that GU earlier at that point where you have that pin bar before the sell. I wanted us to look at do a top down and then see why that point would have been a sell for us.
GU. I just shared with you guys why I sold GU this morning. Okay. Can you see it? This is the reason. You can see this is a spinning top. Even before the formation of the spinning top, we had what looks like.
So I wanted us to look at the higher time frame before our entry level. Information from the higher time frame for the entry level.
What time frame do you want to start with?
4 hours, for instance.
What time frame?
Starting from 4 hours and 4 hours.
4 hour. Okay. This is 4 hour. So what we have here is a shooting star. Right? It looks like a shooting star. Right? This small candle. Right? This is a shooting star. Okay. So after the close of that 4 hour candle, we had a shooting star. I want to go down. The next thing is to go down to the next lower time frame, which is what's it called? Which is the next lower time frame will be 1 hour. So what do we have on 1 hour after the close of that shooting star? Let's go to 1 hour. Okay, so you can see what we had on 1 hour. Okay, so we had the spinning top. The next candlestick had already closed bearish. So we would have entered sell at this level. That was around 7 a.m. 7 a.m. That was the time I executed this trade sell. So it will definitely get to this low. This low, it will get there because there are stop losses at this level. Yeah. So it would definitely get to this level. Okay, but you cannot execute that trade when you consider the risk, right? You cannot execute that trade when you consider the risk. Okay, I believe you can still hear me.
Yes, how many pips risk? Let's see, look at the risk.
You can't take this trade. This is 2104. Prices are 2120. There's like 16 pips. 16 pips. Okay, there's like 16 pips. It could even break this low. It could break this low. Like I told you, this is where I'm considering selling. Okay, yeah, it should drop to this zone. This is a discount zone. This is where I'm considering buying. Sorry, I'm considering buying. Once price drop into this zone and I see a very good bullish candlestick formation, a bullish reversal candlestick formation, I would buy. The gold is going against me at the moment. 16 pips drawdown at the moment on gold. I have a 16 pip drawdown on gold now. Okay, so what I would do is if price drops to on gold, okay, like I told you, there is a high probability that it will still drop into that zone. Well, okay, if it drops to that zone and I have a good bullish reversal candle, I'm going to add to this losing trade. I would add to the losing trade. Okay, so you can see that's entered into this zone. It can still push down to this level. Okay, it can still push down to this level. Once I see a very good bullish reversal candlestick formation, I will take another buy on gold. So the first trade I executed, I didn't go all in. Okay, I didn't go all in. I just risked 1% of my account, 1%. So normally I do risk 2% on any trade. So once it drops in here, I still have 1% to risk on the trade. Once it gives me a good bullish reversal candlestick formation, I will buy. I will buy. Okay. So that's my take on what's it called. Since we're expecting news by 1:30, they might still be pushing price down. But once that news is released, you can just see gold push up. Okay. So that's my take on gold. I'm still very bullish, very bullish, very bullish. I'm just waiting for a good what's it called? Bullish reversal candlestick formation before I sell. There's another tool I use, which is the zigzag indicator. Okay, let me apply it. Zigzag indicator. Before I will buy, I also want to a zigzag should be below a candle. The zigzag helps identify reversal level. So sometimes I will just look at the zigzag for okay, so you can see the zigzag has appeared below this candle. That tells me that there is a possibility for price to reverse. Okay, there's a possibility for price to reverse. That's what this is telling me. Okay, but since this candle is a bearish candle, I would not jump in and buy. I would only jump in if the next candlestick closes bullish at a discount zone. And you can see price is at a discount zone. Okay, that's one confirmation. The first confirmation. Zigzag is below a candle, right? So if the next candlestick closes bullish, I would execute another trade on gold. Okay, so I will not, don't sell gold. Don't sell gold. You have already missed the bearish move on gold. Don't sell. Even if it will go down 1,000 pips, you have missed this move. You should have joined earlier here. Your risk could be as low as maybe 10. The reason I should have executed sell on gold, I should have executed sell on gold, but since gold and what was it called, and GBP USD are positively correlated. By that I mean 70 to 80% of the time they move in the same direction. So since I have a trade on GBP USD, there's no need executing on gold. If I execute on gold, that means I'll be taking more risk on my account. That's why I didn't execute this gold. I should have executed it. You can see what we have here. This confirms change in trend from bullish to bearish. So I would have executed here. This is where I would have executed a sell on gold.
So good morning, sir.
Good morning. Few minutes. I would have executed a trade on gold after the formation of this candle. Okay. After the formation of this candle. This is 15 minutes time frame, right? So or let me start with 1 hour. Let me start with 1 hour time frame. Let me start with 1 hour. So you can see on 1 hour, this 1 hour candlestick closed bearish, right? It closed bearish. You can see, okay, this is the 1 hour. You can see it closed bearish. This is a spinning top. This is a bearish spinning top. This is where we would have entered sell on gold. So after the close of that spinning top on 1 hour, I want to go down to 15 minutes. Now, what am I going to
Hold on,
identify?
sir. Hold on, sir. Hold on, sir, please. I'm not seeing the spine top. Can't touch it, please.
Can you all see my screen? Can you hear me? Can you guys hear me?
Yes, a lot
Yes.
and clear.
Okay. Okay, let me go back to, hold on. Let me go back to 1 hour. Can you see this?
No.
Can you see this candle?
Yes. Down.
No, sir. No, sir.
You can move it up, sir.
Move it up, sir. Move it up. You can't
Hold
see.
on. Hold on. Hold on. Can you see it now?
We can, but
No,
you
sir.
can
No,
still
sir.
move it up.
Hold on. Let me increase the, let me zoom.
Yes,
Because
you can. If
move it up,
they
sir. Move it up.
swing
We
their
can't see.
screen, if they swing their screen, sir, they will see.
Please
Yes.
mute your mic if there is noise at the end. You can see this.
Yes, we can see it now. Thank you.
So we can call this a spinning top, but at the same time, we can also call it a shooting star, right? Yeah. Shooting star, spinning top. Both candlestick formation indicates that the trend is about to change from bullish to bearish.
Change.
So if you like, you call it
Yes.
spinning top. If you like, you call it shooting star, right? So this tells us that the trend is about to change from bullish to bearish, right? Not just that it's formed at, not just that we have a spinning top here. If you go back, you would see that I think that level was a resistance in the past. I think it was a resistance. Just hold on. I want to apply my horizontal line. Can you see it was a resistance? Can you see that it was a resistance in the past? The high of that candle, you can see this resistance here. That shooting star or spinning top tested the high of this. You can see. Can you see it? It tested the high of this previous resistance. So when you see a candlestick formation, shooting star, doji, spinning top, go back and see if that level is a resistance in the past. That's another confirmation. That's another confirmation. So since it was a resistance here, what played out here is what is playing out here, is repeating itself here. You can see what played out here is repeating itself here. You can see. And it has gotten to that level, right? Almost approaching that level. So there's that probability that what played out here now would repeat itself here. You can see what we have here now. What is this? This is an inverted hammer. This is an inverted hammer, a bearish inverted hammer. If the next candle, you know, when you have a bearish inverted hammer, you have to wait for the next candle to close bullish before you jump in and buy. That's what we have now at this point. So if the next candlestick closes bullish, that's by 11 a.m., this 1 hour candle that just opened will close bullish. If it closes bullish, that is when you would enter buy. So what played out here is likely going to play out here, and the market or prices at discount zone too. Can you see that? So let's go back. Okay, now I was on this one. Okay, so after the formation of this, what's it called, shooting star, we go down to, I'm sharing with you guys why I would have entered sell on gold. I will go down to 15 minutes. So what candlestick formation do we have on 15 minutes after the close of that 1 hour? What formation do we have here? Okay, you can see the formation we have here. We have hanging man there after a bullish candlestick. Can you see that? We have hanging man after the formation of that bullish candlestick. I hope you can see that. I hope
Yes,
you can
sir.
see that.
Yes, sir.
So we had hanging man. So if we're just trading 1 hour, we would have entered sell after the formation of this hanging man. This is a bullish candle. The next candlestick closes as hanging man. If we're just focused on 1 hour, we would have entered sell. Yeah, but like I've always said, ensure that whatever trade you're executing on the lower time frame aligns with the higher time frame trend. Okay, so don't just execute trade based on 5 minutes, 15 minutes, or 1 minute. What is the trend on 1 hour, 4 hour, and daily? That is what you should follow on lower time frame. So what we have here is hanging man. So at the close of the 1 hour spinning top, this was the last candle on 15 minutes. And you can see that it has already confirmed that we have sellers in the market. So we would have just jumped in and start selling after the close. So this would have been our best entry price. You see, this would have been our best entry price. So if we had entered at this price, what would be our risk? Our stop loss would be, let's say, 50 pips above this level. This is like, okay, our stop loss would be like 20 pips. 20 pips. If we are risking 20 pips and we are targeting 50 pips, at least 50 pips, by now, we should be out of this trade. We should be out of this trade. Can you see that? So it will not be wise to start selling now, unless you just want to take very, very high risk trade, which does not make sense. You have missed this opportunity, you have missed it. Okay, so that is it on gold. I'm still bullish on gold. I'm waiting for the next candle to close. If 1 hour candle closes bullish, okay, if 1 hour candle closes bullish, that will be a buy. Or even if this 15 minutes candle closes bullish, I could execute a buy trade. That's in the next 11 minutes. Okay, it's either you wait for 1 hour to close bullish, or you wait for 15 minutes, because after the formation of this inverted hammer, bearish inverted hammer, what do we have on 15 minutes? And we could also go down to 5 minutes. So we also had a strong bearish candle on 15 minutes. What do we have on 5 minutes? Okay, on 5 minutes, you can see what we have on 5 minutes is a spinning bottom. You can see that's what we have on 5 minutes. So if the next candlestick closes bullish, I can start buying. I can. Okay, but let's see what we have on 1 minute. I want to be sure there is a shift in market structure on 1 minute. Okay, so this should be a very good entry level. If this high is clear, that will be a shift in market structure. If this high is clear, Okay, that would be a shift in market structure. Then one can consider buying. So I'm waiting for price to break this high, 1820.97, so that I can add to my existing trade on gold. Okay, that is it for gold. Any question? Any question? Just unmute your mic if you have any question. Any question? Any question? Can you hear me? Can you hear me?
Yes, you can hear you, sir.
All right, all right. Any question?
Yeah, no question. For
Can
me,
we end
I
the
learned
session?
something today. I don't know a trader doesn't have to trade every day. I
You don't
guess
have to trade every day. When we say we are day
that is
trader,
where I
or
missed it.
when someone tells you he trades for a living, he does not trade every day. He does not trade. It simply means his major source of income is from trading. Okay, but doesn't mean you have to trade every day. It's not every day you have your setup. It's not every day you have your setup. Okay, it's not every day. You should trade your setup. You should trade your plan. You should trade your model. If you don't have a setup for the day, close your laptop. Go and do other things. The day you have your setup, that's the day you trade and you cash out from that for that day. Okay, it's not every day you trade. You're not supposed to be trading every day. So it's not a must.
Thank you, sir. I guess that is why this week has been for
What?
the setup we have mostly this week has been bearish.
On gold, right?
Yes, yes, yes.
So but I think gold is overbought, is oversold. That's what I think. You can still keep dropping, but I just feel it's oversold. Okay, I think it's oversold. Let's just apply this is let me go to daily. I don't use indicator, but when I just by looking at the candles, I can tell if a market is overbought or oversold. But let me just apply it for you guys to see. Let's apply stochastic. Stochastic indicator helps identify overbought and oversold level. Okay,
So let's use RSI, please. RSI.
Stochastic, both serve the same purpose. Okay, RSI and stochastic, they serve the same purpose. Okay, let me just apply RSI. So it's either you're using stochastic or you are using what's it called, RSI. Okay, you can see on a daily chart, you can see it has been at oversold level for some time now, for almost 4 or 5 days. It's been at oversold. If you go to weekly, I'm sure it's also it will be at oversold. Okay, let's see the weekly.
Still on. Oh.
So you can see the weekly. Okay, weekly is also approaching oversold level. It has to cross below level 30 for it to be oversold. Okay, but the daily is
It
already
has.
at oversold. If you go to 4 hour also, I think 4 hours should be at oversold level. Okay, so you can see 4 hour. 4 hours has been at that level for some time. Now went up. You can see, and you can see on the chart that we have several candlesticks indicating, okay, that the trend is likely going to change. It indicates that the sellers are becoming weaker. That's what we have on the chart, and which aligns with what the RSI indicator is showing us. Okay, so that is just it. You don't just execute buy because this line has crossed over. You can see from this point, it has crossed over sold. It has been at oversold. But when you look at the candles formation on the chart, it is still what? Bearish, bearish, bearish. So you cannot jump in and start buying. Maybe at this point you would have considered buying after the formation of this bullish candle. You would have made some profit here. You can see. But still go strongly bearish, 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 bearish. So you cannot jump in and buy. But this one, you can see price has been in a range for some time. Now, if this low of this candle is cleared, gold will keep dropping. If they can break the low of this candle, gold will keep selling. It will keep selling. I hope that is clear. So if you are buying
Yes, sir.
and that low is cleared, you should be out of the market. You should be out of the market. Don't try to fight with the market. You cannot win that battle. You cannot win that battle. Those of you that don't use stop loss, you are trying to fight the market and you will definitely lose money. Premium tiers. That will be the end of that. That will be the end. It will end in premium tiers if you don't use stop loss. And when you over leverage too, it will definitely end in premium tiers. Don't fight the market. Once the market say you are wrong, say yes sir, I'm wrong. Accept that you are wrong and leave the market. The market will always do what is right. The market is always right. Okay? Don't try to fight the market. That was what I did years back. Was fighting the market, not using stop loss. And I know how much I paid for that. So please, every trade you execute, you know the risk involved in that trade. You know where you are supposed to set your stop loss. What is stopping you from setting stop loss? You want to claim that you are James Bond, please. Not in this market you want to form James Bond. Okay? You will blow accounts if you are trying to form James Bond in this market. You will blow accounts. Market goes against you, maximum 30, 40 pips. Run, run, run. Okay? GBP JPY. Okay, someone said we should look at GBP JPY. Okay, that will be the last day. Okay, we spent close to an hour. Okay, GBP. You can see what happened on GBP was it 2 days ago? That bearish movement would have sent some people to village. But those who sold would have made some good profits. I actually sold Euro JPY that same day. I risked I think 10 pips. But before that strong bearish move, I was kicked out of the market. The market is my SL. Just 10 pip risk. 10 pip risk. So
Good morning. Thank you very much.
you're welcome, sir.
Please, I have another bias about gold. It's
Okay,
on
what's
a
your bias?
it's on a very, very strong sell. Now, if you go to M15, you will see that buy that you professed will end soon now, and then it will go back. It will reach, it's about to reach that resistance and continue the downward sell.
Okay.
Uh-huh.
Okay.
What's your at that M15?
Like I said, I'm looking for buy. Is at my zone now for me to buy. Okay. And I know I could be wrong. Okay. I could be wrong. Like I said, if you look at what we have on this chart now, it's strongly bearish. Long term, it's strongly bearish. But when we say trend is bearish, trend that is bearish would come to an end someday, right?
Yes, no.
It will come to an end someday. So with what we have here, this just tells me that okay, it seems the sellers are becoming weaker. That's why I'm considering buying. But like I said, if this low is cleared, I don't take off. I know they fight the market. So if they clear these lows, then it will continue selling. It will continue
All right.
selling. To continue selling. So I'll just leave the market for them. Make the sales, make the bears they shop their money, they go. And buy me, I won't buy. They say
All
my
right.
buy no go. I could just leave them. Okay, so wanted to look at GBP JPY.
Okay.
GBP JPY. What's happening on GBP JPY? Let's see the monthly. It's not clear. It's not clear. But if you look at what we have here, we had first we had a resistance here, and I think the market tested that resistance, and that is the reason for this rejection. You can see. So we would have entered sell after the close of this spinning top, this bullish spinning top, right? And the next candle has closed bearish. So since on the monthly time frame, this candle, the next candle, which was last month's candle, closed bearish. So my bias is bearish. My bias is what? Bearish on on GBP/JPY. That's my bias based on the monthly candlestick formation. We had a support here too. That support was broken. So beside that, the market tested the previous resistance level and we had a standing top on the monthly. The next candle has closed bearish, which confirms changing trend. And this candlestick closed below the support. This support. So this tells me that we have more sellers than buyers. So my bias is bearish on GBP/JPY.
Sorry, sir, this is GG, right?
Yes, this is DJ.
So this pair will sell.
Bearish. So you can see there was a breakout from this. We had a support here. So probably it wants to retest that broken support. That's my take on. Probably they want to retest this broken support. Okay, so this is the weekly. Okay, this is the weekly. This was last week candle. Okay, so if we apply Fibonacci on this week candle, or let's go to daily. Let's see what we had yesterday. Okay, this was yesterday. Okay, good. This was yesterday candle. Identify the high and identify the low. So if we want to sell, we want to be sure that the market is trading. We want to be sure the market is trading at a premium level for us to sell, right? Since our bias based on the monthly is sell. Can you hear me?
Yes, sir.
Okay, so since our bias is sell, and this was yesterday candle, we have identified the high and the low of yesterday candle. So they want to push price up to a premium level before selling. Okay, they might want to run for the stop losses at this level, this high, before they start selling. You can see that yesterday candle tested a previous support level. Can you see that? It has tested a previous support level. Now let's look at the candlestick formation we had after the close of yesterday candle on 4-hour and 1-hour time. And let's look at level. So you can see what we have here. This is an hanging man, right? This is an hanging man indicating changing trend, and you can see it was also a previous resistance. Can you see it? It was also a previous resistance. Can you see that? So that would have been a sell. So what they were likely going to do this morning, I think they've even done that with this candlestick, this past 4-hour candle. They've pushed price back up into a premium zone. This is premium, right? If you apply your Fibonacci, this is premium. So they've actually pushed price back to premium. Okay, so I think it's set for sell. Okay, based on what we have here. Now this looks like a shooting star, right? That's the last 4-hour candle closed as a shooting star. So let's go to 1 hour. What do we have on 1 hour after the close of that shooting star? Let's see what we had on 1 hour. So you can see on 1 hour we had what's it called? This is a bearish formation. Okay, so for me this is a sell. This is on GJ. It will be a sell, and my first tip will be at this level. So let's just look at it. If I decide to sell GJ now, my stop loss would be, let's say, 5 pips above this level. So my risk would be like 35 pips on GJ, 35 pips on GJ. Okay, then my TP will be at this level. Let's see the risk reward on this trade. That's about 100 and something pips. I could even set it at maybe 80 pips. Since I'm risking 35 pips, 80 pips profit is still a good one. Okay, so that's my take on GJ. It's a bearish. If I'm to take any trade on GJ, it has to be a sell. I can't buy GJ with what I'm seeing on this chart. Let's go to 15 minutes. What do we have on 15 minutes? So you can see what we had on 15 minutes. So for me, this is a sell setup for me on GJ. I can't buy GJ. Okay, so we could see price. Now, what I'm expecting before I will sell also, okay, I was expecting price to pull back into this fair value gap. Fair value gap, that is the gap between this candle, the low of that candle, and the high of this candle. That is the fair value gap. This gap has to be filled. This is an imbalance. Okay, this gap has to be filled. And you can see this next candlestick, this one has tested that level. You can see this confirmed sell. You can see this candle tested that level. But it's still possible that price will pull back into this zone. That is why your stop loss has to be around this level. Around this level. So if I'm even going to take this trade, I'm not going to risk that 30, 35 pips. I'm not adding any 5 pips to it. So my stop loss will be the high of this candle. This is about 30 pips. Anything that makes price breaks this high. Anything that makes price break this high, there's a high probability that price will keep going up if this high is cleared. You can see what they did with this candle. What they did with this candle was to hunt for the stop losses at this level. They knew a lot of retail traders would have entered sell after the formation of this bearish candle. Many retail traders, you can see, would have entered sell because if you go back here, you would see that this level was also a resistance. Can you see it here? That level was a resistance. So most of us would have entered sell. And where are we going to set our stop loss? Our stop, we can see our stop loss will be at this level. So what they did with this candle was to hunt for the stop losses at this level. So I don't think they will be able to push price back up to this level anymore. The next area where they have stop losses now is this level, which they might want to play. So they might not be able to push price up to this level. You can see. So that's the reason for this candlestick. They hunted for the stop losses at this level. So that's my take on GJ. It's a sell for me. So if I sell at this current market price, I want to see price pull down to this next support level. So that's my take on GJ. So that'll be all for today's session. I appreciate you all for your participation, and I wish you all a great day.
Listen, just one more thing before you leave.
All right.
So sorry, you mentioned the other time that your gold trade. You said
Yes.
if you see a particular candle, you are going to add to it despite it's a losing trade. And I've heard that from someone before. So I want to know why will you add to
Let me add it now.
trade?
Let me hold on. You see, I've already missed this move now on gold. I've already missed this move on gold. I should have entered. I should have entered gold buy now. You can see, okay, you can see.
Well, it's not too late.
Yeah, it's not too late, but for me, I'm supposed to enter here. I'm supposed to enter here. I'm supposed to enter.
So gold is buying, sir.
At the moment, you cannot sell it.
Yes, it's buying now.
If you want to sell gold, this low must be cleared. This low here must be cleared. That's when you consider selling gold. This low must be cleared. At the moment, it is buy. You can see the zone I identified now. I didn't just identify this zone. I identified this zone before price pulled into this zone. And I have my bullish setup at this zone. And if you go back here, you also see we had a support here. Price broke that support. And now price is trading above that support. You can see this support that became a resistance. This candlestick broke out. This support now has become, this one now has become a support here, right? It has become a support because this candlestick is likely going to close above it. Once this candlestick closes above it, this tells me that demand has exceeded supply. This demand level has become supply after this candlestick broke out. So if this candlestick closes above it, this tells me that demand has exceeded supply. So if demand exceeds supply, what should happen to price? Price is expected to go up. So if I'm buying above this level, my stop loss will be few pips below this level. Anything that makes price or a candle closes below this equal low or relative equal low, there's a probability that price will keep dropping. So I want to set my stop loss few pips below this level. But now this is a buy on what's it called? On gold. I hope that is clear.
Yes, sir.
Jerry, just give them my number. Just give them my number, okay? Give them my number. If they want to come and learn, probably through Cabana, they have to fund their trading accounts with at least a minimum of $50 to $100 for them to come and learn for free. Okay, but if they want one-on-one, personal, as in one-on-one with me, they should have their 35,000 for online class. But one-on-one offline is 70,000 naira. 1,000 naira for one-on-one. But if they want to come and learn for free, they should fund their trading account with Cabana Capitals, a minimum of $50. Minimum of $50, then they can learn for free. Okay. All right. Thank you. Have a great day.
So I asked a question. You've not responded.
What question?
I was asking why are you adding to a losing? You know, the other time was a losing trade. You said you're going to
Yes.
add to.
Uh-huh. Why am I hiding? Like I said, this is my entry level, right? So I took a trade already, and I told you I risk on 1% on that trade, and I'm supposed to risk 2% on that trade. Okay, so I've risked 1%, and price has pulled back into this zone again. Okay, I entered. I think my first entry was after the close of this candle, and you can see this candle, the wick just tested this zone, but this one, the body of the candle closed in that zone. So that's another entry for me. So I'm going to go in with the remaining 1% of my risk for the day. You get what I'm saying? You get what I'm saying? I'm not just executing the trade because I'm on negative. No, I'm not just executing the trade. That's the mistake a lot of traders make. You don't just execute another trade because you're on negative. It is all planned. Okay, it is all planned. It's not based on emotions. No, it is all planned. That I want to risk part of my trade on this first entry. Probably I wasn't so sure. Okay, that price will move at that level. Okay, so I had to risk a fraction of the lot size to risk for that day. Then if price now has entered that zone, now I can now take another trade. Everything is planned. Are you following? It is planned. Even if I want to execute 5 trades on the same pair, I would ensure that those 5 trades, if they go against me, I don't lose more than 2% for that day. Are you getting me? I ensure that I don't lose more than 2%. Even though if it is 10 trades I want to execute on the same pair, I would ensure that I don't risk more than 2% of my accounts. I hope that is clear.
Well, it will
Yes,
be
sir.
more than now, Mr.
What?
Maxwell.
What?
It will be more than, even you want, if you want to risk 2% and you want
Yes.
to take a third trade,
Yes.
I hope it will more than 2%.
It will not be
But
more
if
than.
the risk,
It will not be more than 2%. Let's say you have $1,000. Let's say you have $1,000 and you are risking 2%. 2% is on $20, right?
yes.
On each trade, you are risking $2. So your risk must not exceed 20 pips on each trade. Now there are some trades you will execute. Maybe probably the risk on those trades will be high. Let's say it could be like 40 pips or 30 pips. So you are risking $3 or $4 on those trades, right? You are risking $4. Now, if the market keeps going against you, you know that the last trade that you would take, the risk will be less on that trade. So if your first trade is like 30 pips and the market keeps going against you, if the market goes against you, let's say 20 pips, if you take that trade, the risk on that trade will be 10 pips, which is like less than 1% of your account. Do you get what I'm saying? So it will still be that 2%. It will still be within that 20. Once I've executed trade and I calculate all my risk, if it is once it hits that $20, I will not execute new trade.
That means you will not enter at once.
No, I'm not entering at once. I'm not entering all the trade at once. Why should I enter at once? If I want to enter at once, maybe I'll just go in with all the lot size. I don't need to. But if I'm
Yeah.
not certain, for example, now this one now because the price has penetrated at this point that I entered the first trade, it just tested that zone. But this one now it penetrated it and is now trading above. That is when I will execute another trade.
Okay.
And the risk I took on this one was about 40 to 50 pips. That's for
Okay.
gold. I told you I don't want to be risking more than 20, 30 pips on this is gold. On gold, the risk has to be high because gold is very volatile. Very volatile. So on gold, if I'm risking 20 pips on pairs, on gold, I should be risking close to 40 pips because it's very volatile. So I cannot use 20 pips. If I use 20 pips, they can just hit my stop loss before the market will go in my direction. So I need to give price enough room to break. Uh-huh.
Okay.
I hope that is clear.
Yeah.
All right. Have a great
Thank
day.
you.
You're welcome.
Thank you.
Have a great day.
Thank you, sir. God bless you.
Amen.